everybody? It's Mark Yegge. Welcome back to another weekly stock market update. Boy, what a difference a week makes, right? Like we had 2 weeks of doom and gloom coming into this week, and everything just kind of turned around based on what Fed Chairman Powell said or didn't say or whatever. So the markets turned up, and they needed a reversion to the mean, frankly, but they're not out of the woods yet. So we'll take a look here and see what we're looking at here. All right. So let's look at the weekly and see what we're looking at here. Let's try this screen right here. All right. So we've got 3 green lights. We're still in a yellow market condition, but we're getting ready to go green any day now. Probably by Monday or Tuesday we'll be green. That means it's time to buy something. That's at least what I do, but you got to be really careful buying things. You got to make sure it's the right thing, good quality stock with good institutional support, that kind of stuff. But I put out a video a few days ago on what I'm looking at in November. I'm not saying you should go out and buy it or sell it. You got to do your homework, but that's what I'm looking at in my cash flow machine program, because we invest for cash flow. We don't invest for buying low and selling high and making capital gains. We invest for income. And so those are the stocks that I'm looking at that are going to be strong and help us create income. So let's take a look at the market. This is the NASDAQ Composite Index. You can see big week on the NASDAQ Composite Index. That last week there, that's a big breach down through the 200-day moving average last week and down through the 50-day moving average 2 weeks ago. But now it's caught both of those on the way back up with some good volume, not great volume, but pretty good. And so we have a nice little bounce after a test of the 200-day moving average, or in this case, it's the 40-week moving average, about the same thing. Here's a zoom in on NASDAQ. You can see it. We've got 3 gap up days, which shows a lot of energy gapping up to the 50-day moving average, that red line there. You can see it's like 4 lower highs and lower lows, right? You can see that there's a certain downtrend there. Can this reverse the downtrend? Well, the energy on those 3 gap up days this week would show that maybe there's some energy behind this. The problem is there's a lot of energy that has to going into that big downdraft that started back in July. And so there's a lot of work that the market needs to do to kind of overcome all of that negativity. But the Fed kind of turned things around. You'll see the treasury markets are bouncing, the stock markets are bouncing, Bitcoin is bouncing, gold is bouncing, airlines are bouncing, a lot of stuff is bouncing based on a lot of optimism. And 2 weeks ago, there wasn't any optimism. It was all about recession and doom and gloom and strikes and bombs and things like that. Now there's a little optimism. All right, let's look at the S&P 500. You can see this looks very similar, coming up and testing the 50. It went above the 200 on good volume on a gap up. Good stuff. That's good quality stuff after a few weeks of doom and gloom, right? Actually, after a few months. And then here's the Dow Jones Industrial Average. It's above both on a gap up. So that's really good. It was just about to make a death cross, that red line going down through the black. But it looks like it's saving that for the time being. I think there's still a lot of negative momentum that it has to overcome to make that red line start to go back up the other way. But it could. I bet it won't. Like the probability says that this is probably not going to avoid a death cross. The New York Stock Exchange is the worst average there, and the averages move kind of together. And if you have one that's dragging it down, generally, and it's such a broad one like the New York, it's going to drag down the other 3. So the other 3 are bouncing nicely, but there needs a lot of work needs to be done to make it all happen. And the New York Stock Exchange is the worst. It's at the 50, but the 50 is below the 200 on a death cross situation. Yes, we've had 5 days up in a row, but there's a lot of work that it has to do to get up above that 50, stay above that, and then get over the 200 and stay above that. It takes time to heal some of those wounds that happen in the market. All right, the CBOE volatility, the VIX, you can see this thing has shot down, and this is the inverse of what the markets are doing. So panic is coming out of the market. That's what this index is tracking. And so you're getting less panic in the market. That means more money is going into the market and propping things up. And so this has gone back down below the average. It's a reversion to mean index, which means now it's in the safer zone than it was over the last 2 or 3 weeks. So that's positive. And then look at the transports. The transports generally lead the Dow. People moving goods around the country is a good thing. And that's what this index is telling us, that, hey, things are moving around the country. Let's look at that. And you guys know that over the last few weeks, I have this thing about the airline index. And last week in my mastermind group, I said, you know, guys, I think we're bottoming here on the airline index. This is like a double black diamond ski slope, right? From 80 down all the way down to like 47. And last week I said, you know what? It's got symmetry above the 200-day moving average and below. I think we might have a technical bottom here. I had no idea why I said that other than just looking at these charts for years and years and years like I've done. And sure enough, you know, a couple of days later, here we are, you know, 2 and 3 days ago, we started to get a decent bounce off the bottom. I don't know if it'll stay in place. I'm not Nostradamus. I just do the best I can to try to read charts. And every once in a while I get them right. And look at the treasury. Remember, the treasury 3 years ago ended a 40-year bull market and has dropped essentially 50%. So if you're in the safe money, making your little 2, 3 to 4%, and you've lost 50%, that 2 to 3 to 4% that you've made doesn't really matter, right? It doesn't amount to a hill of beans when you've lost 50% of your investment. And so now you're seeing a capitulation here at the bottom. Look at the volume bars, the 5, 6 volume bars at the bottom. High volume, telling us that maybe a bottom is in, at least an interim bottom, and that people are going back into bonds. Why? Well, bonds are paying around 4%. The safest money is 4.5% now. And so people are like, well, 4.5%. If the Fed lowers rates, that means the value of a 4.5% bond is going to go up. So maybe there's a short-term bounce getting ready to happen here. This is all technical stuff. Who knows if it's true or not, but that's what I'm seeing on the chart. Like, this has been a 3-year decline. Maybe we get a sustained up. They blew away the top line. They blew away the bottom line. They made lots of profit, sold lots of phones, sold lots of iPads, their thing. And the stock is, you know, it was showing some weakness over the last several weeks. And now it's technically bounced back over that 200-day moving average. Even the 50-day moving average is actually in play here. And maybe we get a bounce out of Apple. I still think there's a lot of work to do on Apple. There was a lot of negative selling. It wasn't high volume selling, just a lot of negative stuff. Like, there wasn't really anything to get excited about. I think now maybe going into the December quarter, something going into that fourth quarter that maybe people get excited about. But technically, there's a lot of work that has to be done. Okay, that's the zoom in on Apple. But anyway, you guys get the picture. We've got a good market. We've got some optimism. We got the Fed not raising rates again and actually not talking about raising rates too much. So things are kind of good, and people are seeing that. So, you know, there's hope. It doesn't mean we're out of the woods. We're still in a yellow market, which means exercise caution. You know, it's like I always say, it's better to be sitting on the sidelines in cash, wishing you were in the market, than in the market, wishing you were out of the market. So just be careful with whatever you do. I like to invest for cash flow and income. I recommend that other people do too, but you got to be in the right thing, and you got to have a game plan, trading strategy. And that's what we talk about every week in my cash flow machine. If you're interested, you can go to cashflowmachine.io, find out a little bit more. Otherwise, listen, I wish you a super weekend. Thanks for tuning in to the weekly market update. I'm actually in Greece right now and sat through an earthquake this morning. It was really exciting. I was like, should I go outside? Should I stay inside? What am I doing? By the time all that thinking happened, it was over. But it was a very weird feeling to have the earth moving under your feet. So anyway, hope you have a safe and fun weekend. And maybe I'll catch you next week on the weekly stock market update. Thanks for being here. Bye.